You can't have your cake and eat it too, unless of course you're a bankster. Welcome back to another Techyesonomics video you have all been waiting for, where today we are going to look at global economic and finance conditions and then relate that to, you guessed it, tech prices. And more importantly, not just tech prices, GPU prices, the foundation of a gaming PC. And a precursor to this video, the future of tech prices all relates to one thing in my opinion, and that is debt. See, we live in a debt-based fiat system where the fiat currencies we use in day-to-day trade have virtually no intrinsic worth except the paper that they're written on. And up until this point, inflation itself has been financed via money creation. Inflation is still moderately high in most Western economies, yet economic conditions are worsening wherever we look. Take for instance France, Germany, Japan, UK, and Sweden. All these countries are now in recession. And some would also argue that China is heading for a recession as well. Though one elusive fact about China right now is that they're experiencing deflation. What is deflation? Well, some would say it's when prices drop. I would argue it's simply when the money supply contracts. That is, there's less money chasing the same amount of goods in an economy. And it is on this pretense that today I will argue why I think in the next few months, prices of tech products, especially GPUs, will come down worldwide. So let me explain right after today's video sponsor. Never pay full price for Windows 10 or 11 again. With today's video sponsor, SCD Keys, you can get activated for as little as $15 using that coupon BFTYC. Links in description below. Deflation, the scary word that governments and banks want you to fear, for as they say, it can ruin an economy. But you should not be scared of it in my opinion. In fact, I personally rather would embrace it and see in a deflationary environment, those who have less desirable goods, bad business practices, and or outright no innovation will quickly find themselves out of business, where the leftover money itself becomes quite simply more desirable. On the other hand, the opposite of deflation, inflation, is the exact opposite of the things I just said, and they generally won't teach you this in textbooks. And I believe this is true for an inflationary, especially highly inflationary environment where people want to just simply chuck the hot potato that is a fiat currency onto the next person. Zimbabwe and Argentina, I rest my case. Western economies have been somewhere in the middle in the last few years. GPU prices have etched their way up to new levels where the most popular card right now is a 70 series card, the RTX 4070. And it always used to be a 60 series class card that was more popular in a new series of GPUs. Furthermore, I haven't seen much innovation in the land of PC gaming in the last, say, 5 years. We are still on the same 1080p, 1440p, and 4K monitors playing the same battle royale multiplayer games. Perhaps a tad bit of deflation would be a good thing to catapult PC gaming to new levels. However, this stasis of deflation is the exact thing that banks and governments don't want. See, governments have borrowed excessive amounts of money as well as banks have lent out excessive amounts of money. And in case of the banks, they're entitled to collateral that if the borrower goes bankrupt, they don't want their collateral to sink in value because it is that very same effect that could send the bank itself bankrupt. And in the case of the government, not enough funds to service their bills. Furthermore, the general gauge for money supply inflation is M2 money supply, which has stagnated in the last year. Remember going back to an earlier Techyesonomics video, where in those videos we said that if the M2 money supply line drops or even stays the same, then prices will go down. Well, here we are now at the line that seems to be stagnating. And with government spending still growing at ridiculously high paces, this can only mean one thing. That is less money in the private sector and more money spent via government, an entity that isn't exactly known for being the most efficient and productive. In fact, I would argue that governments spend recklessly, and if governments were to cut spending instead of spending more, then that M2 money supply graph that we showed earlier would be seriously on the decline. The scariest of all this, however, the government spending deficit, at least in the US, has been on trajectory of an exponentially increasing one, especially in the last few years. In other words, governments are propping up economies on paper, all pun intended, and further increasing the inevitable pain that is to come. Though this is a topic that I could make a whole nother video on in itself, but I feel the consequences of this spending are still quite some time from point critical. What is point critical though? Two cases I can pull up quickly: Weimar Republic and Zimbabwe. Currently, this government deficit spending is actually, believe it or not, contracted somewhat versus the previous years, though it is still well above levels pre-2020. In other words, the government has to print money to spend the difference in what it collects from the public. So one important thing to look at with all this is as this M2 money supply line stays stagnant and this subsequent spending increases, it is my belief that tech products, especially products targeted at the private sector, like your gaming graphics cards, will continue to come down. But what about AI, Brian? That's a tech product and the demand for those products just keeps increasing. Well, I'm just going to raise a question for you guys. Who do you think has a hand in that massive amount of AI demand? I would hazard a guess that governments are contributing a huge part of those orders for AI products, either from direct or indirect investment. Though back to the consumer grade, gamer-orientated GPU. This product has proven itself over the last few years to be simply a discretionary item, and with inflation still remaining elevated in most countries, coupled in with record public and private sector debts, tripled in with higher than typical interest rates on that debt, this leaves the gaming-grade GPU in a deflationary position. Despite rising input costs, demand ultimately determines the price of any object in any economy, and right now the demand for gaming-grade tech products is on the decline. This can simply be referenced by the recent decline in prices of GPUs themselves. Take the RTX 4070 Super. This card only recently launched in Australia and it's already coming down noticeably under the MSRP of 1,119 Australian dollars. AMD have recently released the RX 7900 GRE, which was meant to be a Chinese domestic market only product, to now Western customers at a price of $549 USD, and also slashed their 7700 XT to $419 USD. The used market has also seen price drops that would indicatively make it a buyer's market. I will put a link to my recent parts on video up here to see what I am talking about. Though the craziest example I have seen yet was a retailer in Australia called Techfast, which delivered a gaming PC in the last week with a 12400F and an RTX 4060 for 799 Australian dollars. That's 520 USD for a whole computer with the above specs, and it even has a 10% GST tax tacked on. Talk about competition. Though I do believe with these worsening financial conditions, you will continue to see price drops and perhaps even significant price drops at that, until of course the government gets back to handing out stimmy checks and massively printing up 2020 and 2021 levels of money again. Because that's all they can do, and that is the playbook. Those who disagree, I will raise the point. Has any of the existing assets in the society you live in deflated or inflated? No, not at all. Just the paper value that's attached to them is the only thing that has changed, which will bring us back full circle, only this time multiplied by a much higher factor than that which we saw in 2020 and 2021. So going forward, I believe it's actually quite simple to predict PC parts and their prices and where they are ultimately heading. All we have to do is look at some key metrics, and that is firstly M2 money supply, secondly government spending, and thirdly the central banks and their current total amounts of assets held on their balance sheet. The latter especially, as for while these assets increase, the central bank ultimately prints up money out of thin air and blasts it out into existence. Too much too soon? Well, we'll see heavy inflation. When it falls, however, the central banks take more money in and more or less destroy that money. This is when you will see this graph right here, especially over the long run, is actually correlated heavily to the prices of new GPUs and their MSRPs, especially higher end models. So if you're waiting for the best deal possible, then it's only going to be better until at least this line reverses and starts trending upwards. How hard and how fast it can reverse, however, well, I do not have a crystal ball, so I can't tell you that. The only thing I can do is observe and report, as well as take advantage of this information for myself. Though in summary, M2 money supply is a broad-based indicator for actual monetary inflation. If this level stays the same and or decreases, especially in conjunction with higher government spending, it can only mean one of two things: a deflationary or stagflationary environment, as the government doesn't produce the food you eat, the clothes you wear, and ultimately the GPUs you play games on. The private sector does that, and if the government over-regulates, then you'll see the latter come true. If the government loosens up regulations and allows the private sector to compete more, then you'll see deflation. However, with tech products, I don't see any new regulations really coming in that will affect prices, at least in an inflationary way. So this then leaves the private sector and the industries in it to compete harder for your dollar than they previously had. And with no GPUs on the horizon, at least in the short term, that can only mean one thing: lower prices. So with summarizing today's video, I don't see any new government regulations, at least in Australia and the US and even Japan and other places, coming into play that will artificially restrict the supply of tech products and make them harder to produce. However, if those things do come in, you can see higher inflation, definitely, even though the money supply is contracting. But as the money supply contracts, at least for the private sector, and regulations at least stay the same, you'll then see companies in this private sector have to compete harder for your dollar than they previously had. And so this ultimately leads to lower prices. However, in closing off today's video, I got asked to talk about Europe in particular in the comments section, and what will happen to tech products over in Europe. Well, ultimately, they will follow the same trajectory as the US, as there is an age-old saying, when the US sneezes, the rest of the world catches a cold. And as those prices drop in the US, so will they drop in Europe. In fact, they could be dropping even faster, as it seems like the economic conditions are, especially for unemployment levels and recession data, worse than that of the US. Though the final elephant in the room is China, currently experiencing deflation and at risk of becoming the next Japan. These are the headlines that I read, and governments are at the drawing board in China, frantically trying to figure out what is going on and what to do. And the answer, in my opinion, is simple and always has been. It comes back to ripping off the Band-Aid. And that would involve less government spending, and ultimately less government regulation on the private sector. And this would in turn allow the private sector to heal. Though I believe China will not take this route, and so their economic woes will continue to get worse regardless of the paper price attached to anything in the economy. Hey, at least that RTX 4090, or in case of China, the RTX 4090D, might finally come down in price. Anyhow, guys, hope you enjoyed today's video. If you did, then be sure to hit that like button and also let us know in the comment section below what you think about today's video. Love giving you guys these updates, and I look forward to seeing you in the next tech video very soon. Peace out for now. Bye.